We are certainly entering a dangerous zone. And what I mean by that is when the actual build is more expensive than the market value. For the longest time, it was reversed. It was the other way around. I will get into an example right here in Mississauga, Mineola East to be specific. We'll show you some photos. Let's get into the numbers and the build cost and what it is and how the market is actually reacting, because everyone is waiting for that bell, for the crash, for somebody to wake up and tell them in their face, hey, we're in a recession, or we are within a crash mode. However, it doesn't have to be like that. It can actually manifest itself in other ways. One big example, what we have seen so far, was in condos. Do you guys remember the time when builders and developers, when they started laying off people, when they started, first they started pausing on their projects, then they started completely abandoning their projects? Why do you think that is? Well, it is very simple. There's no money to be made because the cost per square foot and all the other costs that are associated with that don't match the actual sale price. And they're not stupid. They will not invest multi-millions of dollars, time, year, energy, resources, and all of that stuff, and then go under. Many happen to be in that zone, right? They caught that wind, the draft, and guess what? They went under. So now we are getting into the category of detached homes, freehold properties, the untouchable Canadian real estate that is being extremely touched, and it will be touched in 2026. So let's get into some data. So this particular property is literally on the market forever. It's been on the market for over 500 days. And the actual initial price was back in 2024, right? Like over $6 million. Stunning property, 5,000 square feet plus 3,000 in the basement, has a swimming pool. This property is stunning, no question about that. Has a decent lot. It's amazing. Like, it's that custom. It's where you want to be. It's what you want to own and have. However, when you get into some pricing, I wondered, well, how did they actually price in 2024? How did they get that $6.5 million? So basically what I did, the land cost in Mineola East for a lot like that is around $2 million. Then above grade, 5,000 square feet plus, roughly is between 2.25 million and 3.5 million, depending on the finishes. But let's just take the median at $3 million, and then the basement finish would be roughly around $800,000, and the soft cost is somewhere between $500,000 and $1 million. And I took the median route of $800,000. So adding $2 million for land, $3.8 million to build a property, soft cost, it's roughly around $6.6 million if you would have actually built a property from scratch. So this is exactly the problem, because builders and developers cannot pull the trigger, because even if they put all the puzzles together, and even if they had the funds to do it, right, it doesn't make sense, because this property is for sale as we speak for $4,599,850. So getting into some pictures of this property, it's clear that, landscaping has been done, front of the house has been done, stunning. I mean, it's beautiful chimney to the side, interior finishes are great, not the best. We can see that it has been kind of dated for a little bit, but it is what it is. I mean, can it hold the water today? Maybe not for 6.5 million. depending on the taste. But looking at this particular kitchen, I find that this kitchen is completely outdated to today's standards. Island seems to be a little bit smaller comparing to the actual room size. But overall, I mean, it has the square footage, it has the right location, the lot size, landscaping has been fully finished, this iron staircase. Some people like it, the swirly type. Some people like more modern, straight lines. But the bathrooms here, we can see that, it's kind of lacking, I would say, lacking character, right? In my opinion. Now, when we get to the actual basement, there is a theater room. In my opinion, doesn't look anything a high end. That particular projector doesn't look like it's, thousands and thousands of dollars. It's there. I mean, it will do the job 100%. And even those speakers and stuff like that, they don't look like the high-end audiophile or surround sound extra ultra quality. Yes, we get into the wine room, wine cellar, wine room. Fine. It's great. But everything else seems to be, it's lacking that particular character, in my opinion. And it seems like that the entire house from top to bottom, it's not kind of fully connected in the same feel, right? And then when we get to the actual outside, the backyard, I believe is stunning. The lot is humongous. Swimming pool, perfect. Nice size, square, nice, beautiful. There's no question about that. But overall, it just seems like that at this point, that this home has been on the market for over 500 days and not sold yet. However, they did have reductions all along, and it just shows that people are struggling and nobody is buying. Now, I want to add something else. Taxes for 2025 for this particular property is $38,460. Let's just sink that in for a second. So we're talking like what, $3,000 a month for taxes only, and then obviously the purchase price and all of that stuff. But the crash doesn't have to be announced in a way with big lettering and big bold font saying crash, crash, crash. No, a crash happens exactly like this. It starts in one segment, continues to another sector or segment of, in this case, real estate, and then it's biting into luxury properties, is biting into other types of properties, is biting into people's wallets. And then when you summarize everything, because it's a chain reaction, and many folks will be roped in this particular situation. Because if we had a different scenario, a house like this would, like, who knows, employ maybe 50 people between all the trades, between architects, between permits, between this and that, right? And that's only one house, right? Like if you add, thousands of homes in Toronto, GTA, or Southern Ontario, maybe tens of thousands of homes, all of a sudden there's an economy built around that, right? And then there's other sectors, right? Home Depot is working, suppliers are working, appliances, TVs, wires, you name it, like surveillance cameras, insurance companies, everything is linked together, right? And that's exactly what we're lacking. And some people say, well, you know what? It's a pause, and that's fine. Like we're not building, that means the prices will go up. Yes, eventually, yes. Maybe 2030 plus, we will see the effect of the actual need for more housing or need for other stuff. Because in 2025, we had over 20,000 condos just sitting there in the GTA, Toronto GTA. So all of that matters, ladies and gentlemen, matters a lot, right? And in this case, we see that the struggle is actually real and people have been trying to exit for a long time. Now, I don't know this, but I believe that somewhere maybe down the line, did they actually get an offer on this property? And if they did, why didn't they take it? And was the offer too low? I mean, there are all these possibilities, I guess, but what I can see and feel right now that 2026 is around and people really need to get rid of some stuff. It definitely feels like it. So I hope you gain some value out of this. So please like, share, and subscribe, and I'll see you in the next one.